All right, so you clicked on this thinking I have some secret magic word that's going to save you a ton of money. Well, you're not exactly wrong, but it's not magic. It's something way, way better. A proven financial strategy that basically forces your insurance company to give you their absolute best price. Okay, let's get into it. So let's just tackle the big question head on. Can one single phrase really chop $500 off your car insurance bill? And the answer, believe it or not, is yes. But it's not a spell. Think of it more like a password, you know? It's a key that unlocks a very specific door in their system, and I'm going to show you exactly how to use that key.
Yeah, this has nothing to do with luck or hoping you get a nice agent on the phone. This is a deliberate strategy, and it works because of the way these massive insurance companies are structured. You're not just asking for a better price, you're fundamentally changing the entire game you're playing with them.
And this right here, this is the secret sauce. See, when you call your insurance company, you almost always get routed to customer service. Their job is to follow a script and solve basic problems. But the phrase we're about to cover, it's like a secret handshake. It gets you transferred to a totally different department, customer retention. And their goal is completely different. Their one and only job is to stop you from leaving, and that means they have the power to offer prices and rates that the frontline agents can't even see.
Okay, you ready for it? This is the phrase. I'd seriously write this down or screenshot this slide. You say, I need you to show me the rate you reserve for customers who are actively quoting your top 3 competitors. Let's just pause on that. Every word is chosen for a reason. It's a trigger. It tells them 2 things. 1, you're serious, and 2, you're a major flight risk. And that is what unlocks their special tier of pricing, what they call retention pricing.
Now, hold on. Just saying the phrase by itself is going to get you nowhere. It is completely useless without these 3 crucial steps that back it up. If you skip them, the agent will just shut you down. But if you follow this roadmap, preparation, negotiation, and auditing, saving hundreds of dollars is totally within your reach.
First things first, you got to do your homework. This is the preparation phase, and it's what puts all the power behind that phrase. You can't just bluff and say you're shopping around. You need to walk into that conversation armed with real, actual numbers.
So your mission is to get 3 real quotes from your insurer's biggest competitors. But, and this is the most critical part, it has to be an apples-to-apples comparison. The quotes you get must match your current policy perfectly. That means the exact same liability limits, you know, the 100K, 300K, 100K you see on your policy declaration. The deductible has to be the same, even the little add-ons like roadside assistance or rental coverage. If the policies aren't identical, the quotes are meaningless for this strategy.
All right, so you've done the prep work, you've got your 3 competitor quotes printed out or open in another tab. Now it's time to actually pick up the phone and make the call. This is the negotiation, and the key here is to be polite but very, very firm.
Okay, expect them to push back. They're trained for this. They'll probably say something like, well, what are the exact quotes you received? Your response, I'm not asking you to match them. I'm asking for your best retention rate. You see how that pivots the conversation and keeps you in control? Now, if they say, sorry, I can't access that rate, that's your cue. You just say, I understand. Could you please transfer me to a customer retention specialist? And boom, that's how you get to the right department.
Okay, so you've navigated the call. You got the retention discount. Awesome. That's a huge win. But we are not finished. Step 3 is the policy audit. This is where we find a whole other layer of savings by just trimming the fat from your existing policy. Let's start with a really simple rule of thumb. It's called the 2000 rule. If your car is getting up there in age and its market value, what you could actually sell it for, dips below $2,000, it's probably time to drop comprehensive and collision coverage. Just think about it for a second. Why are you paying hundreds of dollars a year to insure an asset when the absolute maximum payout you could ever get is less than $2,000? It just doesn't make financial sense.
Here's another really easy win. Just raise your deductible. Bumping it up from a common $250 or $500 to $1,000 can save you a surprising amount of money every year. But, and please, this is a big but, you should only do this if you actually have that $1,000 saved up in an emergency fund. If you don't, you're just taking on a risk you can't afford.
And finally, you have to go through your policy line by line and hunt for every single discount. I'm serious. Did you recently take a defensive driving course? Are you part of an alumni group? Are you working from home now, driving way fewer miles? These discounts are almost never applied automatically. You have to ask. You have to verify they're actually on your policy.
So how does all this stuff, the phrase, the higher deductible, the discounts, actually add up to those big savings we talked about at the beginning? It's not one single thing. It's the combined power of the entire strategy working together.
Let's just look at the raw numbers here. That retention discount alone could easily net you $200, maybe $350. Then you tack on another $50 to $100 for raising your deductible, then another $50 or $100 for finding those discounts we just talked about. All of a sudden, saving between $300 and $550 every 6 months, it isn't just possible, it's totally achievable.
So let's just recap the whole system. That one phrase we learned, it's not magic, it's the trigger. The competitor quotes you gathered, that's your leverage. And that final policy audit we did, that's how you lock in every last dollar of savings. It's a 3-part system and it really works. So what's the big takeaway here? Don't pay another premium until you've at least tried this. Put this 3-step strategy to work for yourself. And I'll just leave you with this one question. What are you paying right now for 6 months of car insurance? Think about it. Maybe drop it in the comments. Let's see how much we can all